Hey, it's David here, CEO and founder of the Freedom Founders Mastermind community. Just got off of one of our weekly Zoom, what we call FIT calls. That's Freedom Implementation Team calls. We take our tribe of Freedom Founders members and break them up into smaller groups that meet different times during the days of the week. And they do this weekly to have a pulse, to have bring the accountability, bring the consciousness back to the goal, which is gaining more freedom, learning how to invest their money, and just creating a freedom lifestyle that can happen much sooner than people think. And I was on the freshman group. This is the group that is newest to Freedom Founders. We have about 15, every 3 or 4 months, and this group goes through together. And I love being on those calls because the awareness that starts to occur rapidly with new people who first come into our group with really maybe their only experience with real estate most of the time is with maybe owning a home or homes, possibly a commercial office building. And maybe a few have tried a few rental properties here and there with various results and outcomes. Maybe a few have tried a few syndications out there in the space. But most people, and even if they have, they really don't understand what they were doing, right? I mean, and maybe they got lucky and it worked out okay. That's irrespective of my point. My point is, one of the newer members, been with us 6 to 8 weeks, said tonight on the call, he said, David, now I'm starting to understand what you mean by staying away from bright, shiny objects. Because the question came up, what did some of our veteran members do in their allocations of their investments pre-COVID, like back in 2017, 18, 19, and trying to relate that to today. And he made the point, said, well, he goes, I don't think what they were doing or what you all were doing back pre-COVID probably pertains to what we should do today. I said, exactly right. It's going to depend upon several things. One is where we are on the market cycle. I made that point. Where we are on the market cycle is critical to where you make allocations. I don't care where you invest, whether you invest in the stock market, stocks, bonds, mutual funds, or you invest in real estate, or expanding a business. The change in the market cycle, the Fed trying to fight inflation, the high cost of capital, a major shift we're going through. This is not just a short-term shift. I believe it's a long-term shift. Understanding what that looks like and realizing that, yes, the models of yesteryear, meaning the last several years and going back even pre-COVID, are not going to be the same today. That's being a financial advocate. And this doctor, very perceptive, said, well, now I'm just starting to get it. This is a smart guy. He's done very well in his business. But he said, as far as investing his own money, said, I never really knew what I was doing. My financial advisor just kind of always, quote, took care of it. And he said, I realize now how many things I was missing and how much of this I really can understand. It's not rocket science. It's no harder than getting through dental school or medical school or physical therapy school or chiropractic school. It's no harder than understanding the Krebs cycle, even though that might have seemed tough at the time. It's no more difficult than that, and you don't have to go to special classes and go through 4 years of school and a GPR to understand how to take control of your finances. It is not that hard. And it doesn't mean you have to leave completely what you've done in the financial market, 401ks, Wall Street. It doesn't mean you have to leave that. If you like some of that, one of our veteran members was showing what he did from 2017 and showed how he was 95% invested in the stock market in 2017. And that wasn't a bad place to be. There were still several more years of run-up. Then we had COVID, took some air out. And then, of course, the Federal Reserve and monetary and fiscal policy pumped it back up again. And then we had a bad year in 2022. And then this year's back up again. But it's that roller coaster up and down that most people can't stand, particularly when they're wanting to have more certainty about how their money's working for them. More certainty, not this up and down fluctuation. You can't, quote, retire, take your foot off the pedal when you have fluctuations in the market. It just doesn't work. And that's where investing in tangible assets, your business has been a tangible asset that you've been involved in, and maybe some of you still are. And that gives you some certainty, even though we may go through recessions and downturns, you've at least got, an engaged close proximity to your capital. It's in your business. It's in your hands. Well, in a stock market, it's not in your hands at all. You are just hoping that the market and the emotions and human behavior don't just bottom out on you when you retire because you can't stand that kind of loss. With tangible assets, and now I'm moving to real estate as alternatives, you can have that close proximity, but it requires access points. It's the opportunities in real estate and alternatives is that it's an inefficient marketplace. Inefficient, which means that creates opportunity. But to create opportunity, you have to do something more than just be passive and give your money to a money manager, a financial advisor, or whatnot. That's the difference in what we do here. So back to this doctor's revelation, he said, what we all need, the new people to our group, is more perspective, and that's exactly what we give them. They show up every week. We have trainings. I do trainings. We bring different sponsors who have been with our group for many, many years, and we dig in deep about where are we in the market and what pivots, what changes are people making, both on the sponsorship, the operator level, and as passive investors as we are. What changes are we making? How do we move our capital to what I call higher ground and wait through this market downturn until it's time to go back into equities again? Because equities are on a downslide, both in the financial markets and in certain sectors of real estate right now. It's just a matter of the market cycles. Been there, done it, seen this for over 43 years in my investing, and I know how this works and how to move the needle, not trying to time the market, but just being aware of what makes sense based on where the market cycle is. The other piece to the equation is, where are you? Where's the particular person in terms of their career path, their age, their family dynamics? If you plan on being hands-on in a business practice for some number of years, then you can take a little bit more risk, if you want to call it risk. It's not speculation, but a little bit more investment risk if you desire to. You can take more risk there, and you can go more for some growth components, although I don't believe we're going to have much growth in the next few years. It's going to be more about operational efficiency and what I call the show me the money paradigm. Jerry Maguire, show me the money. Don't tell me about back-end returns. Don't tell me about recaps and refis and making the big profits on the back end. Show me the money today. What's your operational efficiency showing you? Because most syndicators, most people in the alternative investments have not played that game, and today, right now, the headwinds are causing them to have some major difficulty, notwithstanding the fact that the cost of capital has gone way up, and the refi capability of refinancing the debt that they had for many years, the opportunity with the low cost of capital, is turning over. It's rolling over. When they're having to refinance out at debt that's twice, even a little bit more than what they had just even a year and a half, 2 years ago, major changes. That's where equity sees its downturn. So where can you be on the capital stack to position yourself to higher ground and be ready to make the moves? That's what we do in Freedom Founders, and that's what this doctor was getting, and I was excited to see that he was on top of it. It's all about your freedoms. Remember, you've got to stay on top of it. It's up to you to do what's right for you.